Welcome to Taking Stock. It is the 2nd of November 2023. It's Bank of England interest rate date and day, I should say. And you never believe it, right? I got a message from John this morning. No show today. I'm in London. I'm trying to get back. There was no planning of this beforehand. This was a big day. He was supposed to be joining me. Dirty stop out. And he's in London trying to get back to Suffolk. So I'm on my own. So it would help largely if you could add some comments here. Let's get the screen up. Bank of England. Here we go. We're expecting, this is what we're expecting here, 5.25%. By all means, hit that like and subscribe button if you're tuning in for the first time, right here on Taking Stock. And how much we got? We've got a couple of seconds left. Let's have a look. Of course, the markets are rallying. Are we in Santa rally mode? Oh, it's changing. Anyone there? Come on, come on. By all means, download the Vox Markets app if you haven't already. What's happening here? Is it happening? Are 12 o'clock? Let me refresh this. Oh, yes, on hold. Let's have the votes here. The votes were 7, was it? Yeah, and changed to 5 to 7. That's not the time, by the way. So, as we see, the market, what's happening in the market? Hey, look at this. The AIM share. Oh, WPP is rallying. Advertising, digital advertising. Look at the AIM share. It's up 5 days in a row, 3%, ladies and gentlemen, off its lows. Ooh! Let's have a look at the overall picture. We are still 47.58% down, 787 days, that is. But what did I say? I hate it when people say, what did I say? But I do think there'll be a standard bounce. Not a rally, a standard bounce. Now, I think the economies will get worse. Growth will slow down, but then the Bank of England or the central banks will step in and reduce interest rates. But it may be Q2, but the markets will be pricing this in. And I think the talk around doing this will become a bit more, transparent. They won't be so hawkish. They'll be more dovish. And I think we'll start to see a rally, maybe Q2, and Q1 may be a bit difficult because the economies will be going into recession. I think the reasons why they'll, reduce interest rates is because of the impending recession that will happen. That's my thoughts. Anyway, by all means, like, share, comment right there if you could. You do like the Santa hats. I created that little thing this morning for the Jerome, head of the Fed, and Andrew Bailey. Okay, I just want to catch up on a quick couple of comments from yesterday. This was about how many shares you should hold in a portfolio, and there's mixed messages on this, okay? And like I said, John and I hold not many shares, less than 10 individual shares, and I own a fund, he owns a fund as well. And my thought is, really deep research on the small amount of microcaps I have and get to know them very well. The company, they are businesses, and if you want instant diversification, go for a fund, and that can hold sort of hundreds of stocks if you want. But here's the comments from yesterday. Dave P, I hold 7 stocks and have cash on the side waiting to invest when I feel the time is right. When is that, Dave? 7 is enough for me. I've held 10 before, but it tends to get too time consuming managing these. So when I have sold out of positions, I've retained the cash rather than reinvested elsewhere for now anyway. That's discipline, Dave. And it takes a lot to hold cash. I've held cash now, but 30% for around about 3-4 months, I think. Around about, it's fluctuated a little bit. Sean, you only need one good idea and enough in it to make a real difference. I agree with that, but I don't believe in that kind of concentration. I think that's too extreme, as you know, Sean. But I know you're into a factor there. Phil, I see Portfolio Clinic. You see many people have too many. Many of them have so many stocks, funds, that you may as well own a global equity fund and you perform a lot better over time. There is that, of course. I mean, as long as it's a low cost, well diversified, big liquid fund, it's fine. But if you're buying that amount of shares, individual dealing costs, will set you back a little bit. But Stephen's gone the other way. Stephen says, between me and my wife, who's between you and your wife? We must hold more than 80 stocks, too many to count. If you can't count them, how do you research them? How do you know how they're doing? What I do know is that when market corrections have occurred, my portfolio value has dropped by less than the headline rate. Yes, of course, it will do. There's less risk, but less reward as well. That's what the thing I'm getting at. It's a fine balance there. I could debate numbers, sand overlapping funds with you for a long time as an accountant, and I could produce numbers to prove that my holders do not diminish my reward and spread risk. Yeah, well, how? In fact, here's a little portfolio thing. I would like to see those numbers, please, Stephen, because, like I said, this is a thing that's knocked up, and this is a very basic model, of course. But I say, if you're holding 100 stocks, okay, and you have one that does 100%, your portfolio's only gained 1%. So if you're happy with that kind of reward, fair enough. I mean, if you go the other end, of course, then if it drops by, say, 50%, you've lost half. So I'm not saying have one stock, but I'm saying around about 5, 10, and then balance it with a fund as well. So how do you get reward, Stephen, holding 80 or more stocks? Because, like I said, what's your biggest percentage holdings? That's what it comes down to. If it's tiny, if it makes it 1% of your portfolio, then where are you going to get the gain from? Like I said yesterday, if you make a 10 bagger, and that's very rare, how many 10 baggers you had, then you'll only ever get a 10% gain. I want more reward for a 10 bagger because they don't come around very often. So anyway, let me know. Okay, let's look at some chat here. That's Ian, CT Automotive chart, which could really already be heading for a Santa rally. H1 2023 shows 26% sales increase with a swing to 2.5 million profit before tax versus an 8.4 loss in the previous year in H1. Sorry, management confident of full year expectations. Do you know what? I just looked at it now. I'm not fully aware of CD Automotive, but thank you for bringing them to my attention. So what do they do? Develop automotive interior finishes, complex kinematic assemblies for most well-known automotive brands on the planet. Okay, so 28 million market cap, is that right? Interim results out recently. Let's have a look here. 68 million. Is that market cap right? Their margins must be quite low. I suppose if they're a manufacturer, so their margins are a little bit low, but underlying EBITDA 6.7. Earnings net debt. They've got a bit of net debt there, but it's come down. Okay, well, listen, let's look at the chart on that. So what were they? CTA. Is that right? Hang on. CTA. Yeah, let's look at the chart there. CTA. Where you go? Oh, here we are. I like to see that. I've got a 200-day moving average and a 50-day moving average. The 50-day, of course, short time frame. But you can see there, this is what I say, try and avoid downtrends if you can. You don't have to be a genius at charts to realize, when a downtrend has sort of ended. The discipline is not to get in a downtrend, thinking, oh, it's getting cheaper. Yeah. But because that's basically it's money outflow. People are selling, and you don't want to get in the way of that tidal wave because you're surfing the wrong way. So we come down pretty much, look at that, from what, 167 down to literally 35 pence. And then big up day. You often get these big up days on an oversold position and breaking through the 50-day moving average. Sellers come in, of course, with stale bulls. They'll bring it back down. So what you want is another break of that. That previous high there was 44 pence. And if you scroll across, it's pretty much here and here. And then, of course, it breaks 200 moving average. I like that. That's a chart I like. I'm not aware of the fundamentals too much, apart from just looking there. But it's looking good. You can see there the downtrend has high probability has probably ended. So then, you do your fundamental research first and then make sure your timing's okay. So CT Automotive, one for the watch list, I think. Thanks for that, Ian. Ian Wright. Oh, yeah. Where are those centre hats? Yeah, exactly. John's not even here. The dirty stop out. That's what I'm going to call him now. John Dirty Stop Out. Because I got Destiny Pharma bug this morning and bought some more. The volume this week suggests something exciting. Yeah, well, listen, I don't like to talk my own book, but when it is on the front page of Vox here and it's most followed and it's one of the biggest rises as well, it is. This is why I like micro cap stocks and sort of nano cap stocks. But you have to. They are more risky, more rewardy, but you have to do a lot of research. And like I said, when I was sort of buying down at sort of 28 pence originally, and 30 pence, I thought, what's going on here? This is so undervalued. You have two, late stage, phase 3 assets going to phase 3, one partnered, and they've got a pipeline, and they got funding for a year or so. And yet they're down at literally 25 million market cap, which is nuts. Compare that to any other biopharma. But yeah, I don't know what's going on with the volume. So if you look at the volume here on Vox, you can see here average volume is 424. And today, on no news again, 570,000. So there's something going on. Sometimes, of course, again, the argument for momentum is that a rising price attracts buyers, a falling price attracts sellers. So that momentum can get exponentially, busy. But again, there was a lot of 10,000s coming today. And I think it's picking up here. But looking at the chart, I'm not going to say there's the deal going to happen, but the fact that it's happened sometimes, volume can come from nowhere. But what I do like, again, cliches hang around because they have a ring of truth to them. They resonate very well. And there is a saying, never sell a stock at a 52-week high, never buy a stock at a 52-week low. That's all about momentum. Like I said, selling begets selling, buying begets buying. But here you can see now we are at going back to 9th of March, 2022. It's a high then, and that was coming down. Now this is going up. So last time it went up at this level, where were we? Here in November 2020, and literally hit a peak of 242. And they weren't as advanced then. They didn't have two assets, a deal on one, and a cracking management team. It could be, maybe someone's buying in. You may get a TR1 coming out if they're buying that amount of volume, showing they're a significant holder. But yeah, it's nice to see that ticking up today. And look at that, it's top of the bar as well. And there's a gap up. The volume was amazing there. Gap up yesterday, and literally the gap was pretty much on the previous high, which is very bullish. So, do apologise. I don't mean to talk my own book, but you did bring it up, Supermono. Macman, yo! Okay, thanks very much for that. Yo ho ho. Sorry, I'm trying to go through the comments here. John's gone fishing in the storm. Well, he's gone fishing for something. I don't want to say that, but I don't know what it is. But yeah, he let me down today. It's the big Bank of England day, and in fact, you know what? I mean, let's look at the indices. You love this, John, though. Number one riser in the FTSE, Ocado. He hates Ocado. He gutted. Let's say biggest rise in the FTSE, BT. What's those fallers today? Pharmaceuticals. There, Howdens. That was a bit of a trading statement. They're falling. GSK. But look at that. All red. You often see, I'm not being rampy here, but when you get indices doing over 1%, big rising, it's almost like going back to vaccine day. Remember November, what was it, November 9th? Was it 2020, 2021? When everything sort of rose. And you had that yesterday. This stimulated, obviously, from yesterday when Jerome Powell came out, didn't raise interest rates in the US, of course, but also have paid back their long-dated bond selling program, which is a bit more bullish. And I do think, like I said, the economies will tick down. Bad news is good news. We'll have a recession. That's the bottom of the market. The central banks will step in, and then money will get cheaper. Good for equities, of course. Okay. Sorry, let's get some more comments here. I'll get the front page of Vox in a minute. What's your view on BT's report today? Just up 8% on the day, but still down massively over the past few years. Well, John would like to. John's the man. We'll talk about. He'll be back tomorrow. If he's not, he's be in big trouble. But John holds BT, and I haven't owned BT for many years. I find big stocks very boring. And if you don't know, I just have those in a fund. I find small macro caps very exciting. So I cover off the big stocks in my fund, and then I do my research. It's all about time spent researching. You can't research 2,000 stocks. And that's why I look at smaller market caps, because they are bigger movers. And also. It's just time management, isn't it? Put this figure in your head. 60% of the best risers over 1, 3, and 5 years are sub 100 million market cap. 40% are sub 50 million market cap. Okay. Now there are 2,000 stocks pretty much listed in the UK. And if you go sub 50, there's only 500. And if you put, a filter on of, 20% top line growth, that brings it down to 150 stocks. So you're looking at growth, small caps, and then you look. Obviously do a few more research, but it's just about sort of managing that space there, that logistically it's more manageable. And so that's why I cover off all the biggies. But I can look at the charts on the biggies, but I'm not that much open. John's more over the boring stocks. No offense, John. Okay, let's look at the BT chart, shall we? I mean, essentially, and people will criticize looking at charts a lot, right? But it's money flow. There's no truer form of money flow than looking at a chart, and that's it. And so if there's net supply coming to the market, the share price will fall. If there's net demand, it will rise. Simple as that. So if you want to know if there's demand for stock, look at the chart. And that there, you can see there, it's been a dreadful chart coming down, pretty much huge, massive downtrend, a series of lower highs, trying to rally here. And then, of course, look at that. Even that there, you can see that, lower highs. Every time it tried to rally, some sellers came in, took it down, and again, didn't quite reach that peak, and all of a sudden dropped off a cliff. And it crossed the 200-day moving average, dropped off a cliff. And now, though, here, this is forming a bottom, I'd say. Well, I don't know, BT is very hard to call. But what you want it to do is take a little time to form this bottom, a bit longer, and then break some new highs. And there's previous support and resistance here. And in fact, the high of today, if it can break that and get it back into this range, like I said, a couple of times it bounced here at 120 and then broke lower. So there's a seller came in. I don't know what that was report on. Is that 6 months ago? Or maybe the last trading update? It obviously broke lower there for some reason. You often get that, big moves on news days. So it needs to sort of get above that level here, really, a little bit higher. And then consistently then sort of form some higher lows, but as yet there's a little bit of a range. It needs a break out of that range there. Okay, sorry, I want to get to sort of front page of Novacyt, so we cover some news stories off. Share screen. There we go. Audioboom hits 1 billion advertised impressions milestone, and they are, I think, the most read today, and they've come down massively on the chart, and it hasn't stopped the chairman buying all the way down, Michael Tobin. So Q3, they did say it's turning around a little bit. They had this big hit from this Morbid podcast, which left them, and it was a little bit worrying if you got one podcast, upsets your fundamentals a little bit. They said strong start to Q2 and 19 million for Q3, and maybe it's turning, but as yet, if you like Audioboom, it's the chart. I mean, they did go to a loss. They did start making a small profit, and they went to a loss. Of course, the advertising market took a hit. And I keep saying this, I repeat myself. I do like the podcast sort of hosts like almost a Premiership team, football team. It's a high wage bill there. You've got to acquire talent who bring their own audiences, because to grow a podcast audience is quite hard. Oh, look at that! So I don't think I put this line on before. But that line there, so dipped down to that level here at 150 odd, and a couple of times it's broken down, broke back up, broke it down. It's messed around the 150, and it's back above that, and it's touching the 50-day moving average, which is not bad. I'm not saying that's the end of a downtrend, but it's not a bad start. So who knows? That's Audioboom, what's read there, and how much is it up today? It is a bit like Vaccine Day today, isn't it? Which is annoying. If you have a stock that's not rising today, it's slightly annoying, because that's at 20%, and you see probably one of the biggest rises had for a while. In fact, since July, in fact, in AIM all share, it's one of the biggest rises. 5 days in a row now, AIM is up. That hasn't happened since June. So is it the bottom? I don't know. I think we've got a Santa bounce on here. Fingers crossed. Let's look at some more comments. Okay. Smith and Nephew finally getting this act together. All right, they've come up with a bit of good news, have they? Let's have a look there. Let's look at Smith and Nephew. What they said then. Let me just. By the way, if you want to catch up on the Smith and Nephew, if you want these RNSs delivered to your inbox, to your front screen, obviously just get the app. Appointment of a new CFO to sort out the figures. If you want to sort the figures out, Q3 revenue. It's up on 2022, 7.7%. There we are. Orthopedics revenue. Orthopedics revenue. Oh, yeah. I don't know why I find that funny. Full year outlook, underlying revenue growth currently expected to be towards the higher end of the guided range. That's the thing, you see. Keep guiding down. Your share price is like a tanking. Eventually, you can guide back up, because it's, guide down so low, you're going to beat, hopefully. But let's look at Smith and Nephew. SN. Yeah, that's you very rarely get a bounce recovery like that. If it does, it could go quite high but come back down. It needs to sort of like I said, a couple of times. In fact, there's a good example here. Look at this. It did that back here. Okay, it bounced, come back down to this level. So you get this V-shape. You don't get V-shaped recoveries very often. It happened during the COVID dash for cash crash because central banks were pumping millions and billions of money into the system. But very rarely do you get a V-shaped recovery. If you don't, even there, it's a big rally, but eventually it comes back down. So what we want to see is a long bottom forming. You know what I'm saying? Ooh. So Smith, but it's nice to see a bounce there. Big bounce there, isn't it? Well, 5% up from yesterday. It's a nice bounce. Okay. Let's go to the front page here. We're looking at streaks. Do you know what? Have a look at this website. It's all about. By the way, I don't know if you saw Elon Musk said the AI could be on the end of the extinction of humanity. I do believe he's quite right. I mean, because AI will exponentially develop as AI gets better. The speed at which it's developed, it'll be amazing. And it is quite worrying. I mean, if you think about it, businesses, will they be able to hold themselves back from producing the most advanced AI machines ever if it comes to the point where they think, humanity's at risk here? Because quantum computing is faster than our brains. So it will get to the stage where, these machines will be, more intelligent than humans. And that's the worry. When do you put the brake on it and say, hang on, stop there? You can't have that. But Streaks here, they've got Streaks Companion. Now, I'm assuming it's been quite nice for the internet generation. Of course, my parents' generation, they wanted TV. And if you, on your own, you get, your partner passes away, you'd watch TV for companionship. Now, look at this. They've got a companion, right? So if you go there, Victor's in the write-up on this. So read his opinion. But 4.3 million market. If you go to this website here, right, Streaks Companion, what you get is you can chat with Draco Malfoy or Harry Potter. Obviously, it's not real because Harry Potter's not real. But if you've got big fans, you've got 34,000 chatting with Malfoy. Hermione. This is an excellent fan site, isn't it? For sad fans who would like to chat with pretend Harry Potter. But if you click on that, you have to register. But you can even chat with historical figures. Who? What? Albert Einstein, Queen Elizabeth. How on earth are you going to do that? But this is the kind of thing that's going to happen with AI. It's amazing mod now. But this is like an insight in what it can be used for. You can chat with Genghis Khan. There was no computers around then. How is that happening? But you can see how crazy AI could get. Where is Streaks, by the way? Streaks AI. What's the chart looking like? Oh, it's a bit of a faller there. Yeah, maybe you need to get the AI to buy some stock. But do you think that? Are you a little bit worried about AI? I am a little bit. I think we need to put some limits on it. Let's have a look. Sorry. Surely John can tune in from the back of his Maybach. Yeah. Santa visit BT, MCG, and Trust today. That's David. UK base rate stays at 5.25. Thanks, Steve. As predicted, yes. If you hold over 20 shares, you might as well have one index fund unless you are a star stock picker. True. I don't think you have enough time. If you've got another job, if you're just sitting there all day looking at stocks, fair enough. I think, you can keep an eye on 10, 15. Above that, it's very hard to monitor them properly. Remember, if you want to share, you want to share a business. Could you actually physically own 20 businesses to keep your head over them? It's hard. So that's that's what I'm saying. So the investor guide Spear is one to look at for learning diversification. It's more diversified than some. A Destiny Pharma is motoring. Does it mean the trend is changing from med tech and farmers? I don't know what's going on there, but there's a lot of volume going through there. Like I said, on a non-news day, it may be just momentum, or it may be someone buying in the background with a bit of cash. So is it one big buyer that's encouraging other buyers, or is it just lots of small buyers? Share price is rising, momentum. Never underestimate momentum. That's why you should always look at a chart. It's huge. You can go a lot further, both ways. Sean Dent, VLS, CAT, ODX, BIDS, GFIN, PHE, and Pollux are all stocks I've owned along with AVCT. All but AVCT are down 9%. Diversification done nothing for me, Justin. But Sean, it's not just that. Look at what you're investing in there. They're all pre-revenue, or if it lost making stocks, or they didn't have, so, and with cash problems, pretty much, they're all of a similar ilk. Like PHE, for example, did 10 bag, but you could say you may mistime that, GFIN also 5 bagged. That's all about timing, isn't it? It depends where you bought in at all. And if you start with valuation, like Plarian, as well. I bought in at 15 pence, up to a quid. I didn't sell on the drop. I was stupid. But all those companies had multi-bag depending where you got in at. Many young investors watching will think they know what they're doing and get burnt if they over-concentrate. It's about balance. Yeah, it's about balance, absolutely. I think funds should be the backbone to your portfolio, full stop. And then well, I'm not going to go into what level I think. They're all small. Yeah, that's not diversification. You're right, Sean. That's not diversification at all. Yeah, true. That's why I said, I mean, as a rough rule of thumb, Sean, I mean, depending how old you are, I said in the weekend podcast, Steve, you didn't get it. I said, you could take your age, half it, add that to your age. That should be how much you've earned in a well-diversified fund. And then the rest, you try and make money on higher risk reward stocks, but do a lot of research on them. So you have a few, but you can get your head around it, Okay. Rumors that John has been eaten by his maggots. Is it true, Justin? Steve? I don't know. We just had no show today, trying to get back to Suffolk. Like it's an expedition, it's like a developed world, something where they don't have train tracks and stuff. How long does it take to get back to Suffolk from London? Desk often goes up before news. Okay. You said all red. You meant all green. Yes, sorry, all green. Sorry, I mean indices are all green. Yes. Can you check out fusion antibodies? You keep asking me to look at Fab. I said before, I think they're a bit small. I mean, right. I'm going to do something now. What I went on through researching microcaps. I become obsessed with microcaps and nanocaps. I often thought like buying the smaller you can get better, but no, if you get to a certain smallness, you can't scale, especially in bear markets. You can't raise money because you're so small. You can raise about 10% of your market cap. That doesn't go very far because your costs, even being a listed company, what are they? $500,000 a year? So that around that level, I don't know. So it's you are literally limited in what you can do, how you can scale. So you need to be a certain size. I would say never go below. It's rare. Listen, there's a rare one where you get near death situation. Look at the biggest riser today. Okay, is and the most followed. It's Ethernity, and in fact, ignore that because that's a consolidation. It was the biggest riser recently. And if you look at that, that was a near death experience. That's too risky a situation. That was nearly going to go through, and then it literally got a lifeline today. They've announced a contract, so it's done. From the bottom, and not many people want me to put this on the chart. Not many people would have got in the bottom, but it's literally, done what? 10 bagged from the bottom. And let's be honest, not many people would have got in the bottom. I mean, apart from risk takers, and you wouldn't have put a lot in because it was going to go through. So, you can't predict those kind of things. But I think, sub 5 million, a little too risky because they can't get scale very rarely. Because they can't raise enough money, and there's very few profitable companies below 5 million. So be careful. I mean, the smaller you get, the more risky they are. There's a certain ideal size I think you shouldn't go below. Just opinion, really. Okay, so let's just go on the front page here. I'm covered many stuff. It's 27 minutes past here. Hang on a sec. Let's go here. Audioboom, Shanta Gold. I don't understand. This guy here, Shanta Gold's Eric Zurin, Chief Executive Officer, said, I'm delighted to announce an update on drilling in our West Kenya project. The first update, but they've come up with these drill results, but it's gone down. I mean, I don't know if it's risen on the price at SHG. I know gold has been very strong recently, so maybe it's rallied in line with that. That's a messy chart, literally. It's come down, it's in a range. So that's Shanta. I don't know, any of you in Shanta? Shanta. Shell, unbelievable amount of, it's nuts, isn't it? Shell, the amount of money these are churning out. What is it? Shell profits Q3 6.2 billion, and that's and they're going to do share buybacks of 3.5 billion over the next what is it, up from 2.7, and was it dividend unchanged. And so let's look at the chart of Shell, and in fact looking a lot better than BP. But I did get into Shell a few years back when it was going down, and what was it? literally when it was we're down here. But look at that. That's an excellent uptrend in Shell. Okay, it dips now again, hits the 200 moving average, but moves back up. And every time I think, will it roll over? Who knows? But if it goes below 26, get out. They've got enough assets and stuff to sort themselves. But yeah, that's a nice little uptrend in a big company. Okay. Any other stocks? Sorry, I'm looking at the wrong thing. Like you shouldn't. Yeah. Yes, I only have 2 fund stocks to concentrate on one fund. Yeah, well, you call them fund stocks. I know that they essentially I do have 7 stocks, but I don't believe. Well, they are risky. All businesses are risky. Nothing's a no-brainer. There's always left field events happening here. Okay. Anything else? Velocity Holdings, Ethernity, Shell, Hydrant. What is it? Shell there. What's the rises here? What's the fallers? Southern Energy raised some money. Star comes down. Well, Star can track. Never understood that company. They announced big deals. Never really materialized. Uplands down. Empty down. Anything else? Oh, Equals is quite interesting, wasn't it? So they've literally put themselves up for sale, haven't they? Response to market speculation. Where was that coming from then? Who was speculating? I didn't hear any of this until they announced this. You often get that. I suppose if some people mention it, you've got to mention it though. But literally, they have noticed the recent market speculation and confirms it's conducting a review of the company's strategic options. As part of this process, the company has contacted a limited number of potential counterparties, including Fleet Core and Madison Dearborn Partners, to assess whether such parties could put forward a proposal that would deliver greater value to equal shareholders. There's been some excellent value created for equal shareholders, especially in this bear market. It's consolidated for a while. So if shareholders are complaining but not getting value for money, you bought in at the wrong time. Because look at that. It's gone from like 21 pence up to £1 odd. And this is in the bear market. Very few companies have done that. That was largely through growth. Doing very well. Operations improving. It did struggle. It did sort of, have a range for a while. But still at 114. So I don't know. They're calling up saying, excuse me, do you want to put a bid in? Yeah? Okay. EQLS is the ticker. Cheers. Thanks. So I don't know how that's how it works, or whether, but it didn't say the company's contacted them. It says they're contacting the company. So who knows? It may come up with something. But I think it's done very, very well. And well done to Ian and team, and Paul hold some of that. So there we are. Okay. Anything else? There wasn't a lot of RNSs out today, I thought. I just thinking. But anyway, yes, this is quite interesting, isn't this? It's this AI firms visiting the UK, and Musk is saying could be the end of humanity. I tell you. Do you think he's just saying that because he hasn't got a dog in the race? Has he got AI a little bit, but he hasn't? He's not like up there, is he, with Microsoft and Google and stuff? And M&S pulls an advert after Palestinian flag criticism. They had party hats in a fire. It's hard being a brand in this day and age, isn't it? You're criticised for everything. And these party hats were, people say, essentially, it's meant to playfully show that some people don't enjoy wearing paper Christmas hats. And apparently some people say, look at the colour of the Palestinian flag, and people are mad about it. I thought, it's hard to be a brand in this day and age, because, of course, it wouldn't have been a Palestinian flag. But I'm saying, and Shell there, and they're there. Any other stocks? I don't want to rattle on because just, again, bored of the sound of my own voice here. Any other questions? Also, in defense of John, the trains are in chaos today. Yeah. Oh, I had Rich, SPDS down another 5.5%. It's not really. If you look at it, it's the last price traded. And literally, there's very little volume. So it's nothing to worry about. Honestly, one of the most exciting stocks out there, I believe. Again, I'm playing my own book here. I genuinely believe that company is one of the most exciting out there. Anyway, when are you chatting to Paul Hill? That's tomorrow morning at 9:30 live. So bring some questions with you. Next, flying up again. Great forever stock for me. Well done, Steve. I bought equal to 25 and sold at 80 pence. That's excellent return. Naive question. Here goes. When you buy a stock from a company, how much of it goes to the company? Assuming, of course, it's not just the company that you buy shares from. None. Unless they're issuing shares, new shares. It's literally, it's market makers. So they are the middlemen, and they're buying and selling, they're matching buys and sells. So if there wasn't a market maker, essentially, you'd have to buy someone. If someone's going to sell 10 shares, you'd have to buy 10 shares only. But market makers have to take some shares on. They say there's a market for this kind of lot, and they do lots of, say, 5,500 shares, whatever. And so it's not going to the company. But it's all about supply and demand, essentially. That's why, again, looking at charts is very good, because when supply tightens up and demand is up, then people start selling shares at a higher price. There you go. Okay, Des is going to break 70 pence barriers. What's going on? I don't know what's going on there, but here we are. Anything else? Sorry, if I missed anyone, sorry, it's hard to keep scrolling and do that. But Ethernity should prove interesting with news, which is due over the next few months. Videndum might be worth a look soon. Lots of debt and possible equity raise, but once the actors strike ends, could be a good recovery stock. Yeah, biggest is not best. Yeah. Oh, sorry, thoughts on Novacyt? Sorry, I missed this. Their cash alone is worth more than their market cap, and they have acquired Eugene Health. Yeah, I saw that. Let's have a look at just Novacyt. One last stock, Novacyt. Yeah, I mean, isn't it still going on about? Hang on, where's Novacyt? I mean, NCYT. But don't they have a lot of cash as well? What's happening with that? Is it still a legal problem with them? With the Department of Health and stuff, and they put some money away for that because of the contracts. I don't know how that'll come, but I don't know. But like I said, it's a nice rally there, isn't it? You often get these crazy upticks when it doesn't have a breather. Sometimes it has to come back down. Maybe it's a seller there, but that's a bit of a messy stock there, isn't it? I literally, I can see it's coming down, and it literally is breaking the 200 moving average. It peaked up there once, done it for a big time there. So maybe we are at the bottom, because what you've got there is literally, a higher low, and from there to there. So maybe that's the bottom, and it's worth the valuation of that. I know that they've got a lot of cash, so that's good. I'll have a look at it. Okay, we'll have a look at it again. So when John's back, we'll look at the thing. I think I've looked at it previously, but maybe that's a low. And thank you for tuning in. Don't forget, if you can, thumbs up on this if you could, please. Share it with everyone you know. And the boss said, unless we get 5,000 subscribers by Christmas, we're not going back on air. So hit that subscribe button. And of course, download the Vox Markets app. It's free of charge. But once you start using it, it'll be priceless, honestly. Like I said, RNSs find you. They come to the front screen of your phone. They don't go to your inbox. You have to search for them, or you have to go to the website somewhere. They come to you. And it's free of charge. Absolutely. What is free of charge these days? What is free in this life? Nothing, apart from the Vox Markets app. Thanks very much. And we'll speak tomorrow. Hopefully John's here, okay? When he comes on tomorrow, just to start calling him, Stop Out John. Thanks for that. Speak tomorrow. Well, you love that. Bye.